Welcome back for another videos. In today's video, I'll mainly going over how I leverage fair value gap and inverse fair value gap, or in the smart money concept, SIBI and BISI. It's the same thing, essentially imbalances that was formed generate a move up or move down. Before we dive into how I leverage fair value gap for the daily, identify daily bias or my entry, first I want to cover what exactly is a fair value gap. In short, fair value gap is a three candle patterns that is formed where there are essentially strong buy side or strong sell side, where there are a gap left here, which essentially are orders that are unfilled by the institute or smart monies. That ideally these are the liquidity zone that we view it as a magnets that price will retrace back to rebalance towards to fill those unfilled orders and then collect liquidity, stopping trader outs and trapping traders out the wrong side of the overall trend direction. So in short, why does it matters for us to identify these gaps? First, for general higher time frame, when we identify the daily bias, we can identify these gaps where the price are respecting it and where it's not respecting it. And it will give us an idea on where the overall general trend is going to be going for today's trading. So for our intradays, this gives us some sort of bias that most likely the price will retrace back to or rebalance back to a certain range, which give us the liquidity that will attract towards. And the same thing as entry, when you lower down to the lower time frame, you will see this gap and you can use this as entry. Typically, I like to leverage the inverse fair value gap more than fair value gap because inverse fair value gap, in my eyes, is a higher probability. Typically, inverse fair value gap means fair value gap failed and means only typically 80% of chance the price will go only in the opposite direction. Okay, now let's jump into leveraging using fair value gap and inverse fair value gap or inversion for a entry. So before we jump into entry right away, you first need to understand the higher time frame bias. So as I mentioned in the previous slide, the first very important, doesn't matter what strategy what you're using, you first need to understand the higher time frame, which is your overall bias for the day, the direction where the price is most likely attract towards. So from the higher time frame, we use, for example, on the right side here, I have two fair value gap highlighted. So the big box here in purple and the big box here in purple, where the price is majority sitting. These are essentially 1 hour fair value gap. There are essentially, these are the zone I want to play at. I expect the price I want to see is either there's going to respect this fair value gap in the higher time frame. If it's going to respect it, I expect the price to move upwards and attract this as a magnet towards this price as my target. Okay, so that essentially covers the higher time frame bias, and I love typically leverage between 1 hours. I think that's more enough. I don't go lower than 1 hour, and then if I don't find in 1 hour, I typically go up to 4 hours, and usually you can find between this two time frame to find a different between a bullish bias or bearish bias. Now, next thing that we want to look for is in the lower time frame, we want to look down towards where if we can find a liquidity sweep within these higher time frame fair value gap or inverse fair value gap. And the next thing, of course, we look for a displacement and a market structure shift. And then we look for a retrace into a fair value gap or inversion. Typically, I prefer inversion fair value gap because those are typically a higher probability due to just simple, if this didn't happen, this will happen. Inverse fair value gap essentially, or inversion, what I typically just call inversion, typically it just means a failed fair value gap. Fair value gap typically is a continuing of a trend. Inverse fair value gap essentially is it disregard a trend and then it push past towards that fair value gap and then form a reversal. Okay, now jumping into here, but we can take a look. Here are the 1 hour, right? So these are the 1 hour, 1 hour down here as well. So these are zone are 1 hour. Simple. Once the market open, these are the liquidity I'm looking. So you can see these are higher high, higher low, higher high, higher low. Once this liquidity is swept, I want to see if this is going to respect this overall 1 hour higher time frame. Let's say if it doesn't and you see the price continue lower, then you won't expect the price to push towards. Most likely the price is going to have a continuation downwards towards a higher time frame fair value gap or any liquidity zone below. But in this case, what I'm looking for was if this is respecting, which I do see is respecting this, once the liquidity was swept here, what I want to look for is a market structure shift right here. Once the market structure shift was displaced above, what I want to look for is a retracement back into this inversion. So here, this is, you can see this is the fair value gap that this price is essentially respecting it. But once this broken out with 2-3 candles right here that's formed above this, that means this fair value gap is no longer valid. This become a inverse fair value gap, become an inversion. And this is typically a setup I like to take. So you can see this also line up with a water block here. And also this is inversion. You can put your entry here and then your stop below this candle. Okay, so outside this inversion, you do not want for the price to close below this. You also can, if you want to be safer, sometimes this pullback, you can pull it down here, but this is a little bit too big for me. So I typically just put my stop here, and then I'll do a 2R. So somewhere around here as your initial, and then your whatever runner will be up here, and this into 1 hour of fair value gap. So keep it as simple as this. And basically to highlight is the key rules is always find a higher time frame fair value gap bias, and then you can leverage the lower time frame. But before you jump in the lower time frame, you must have some sort of higher time frame bias drawn out, whether using fair value gap or inverse fair value gap, or whether PDRs that you leverage. These are essentially what I do on a daily basis before I even look into any single trade. Okay, now let's dive into an example here. So the current example I'm going over is one of the trade I took this week on Wednesday, and I want to go down on the top-down analysis on how I formulate my trade and how I was able to tell the overall direction just using the fair value gap and inverse fair value gap on where the price is going. So a couple things. This is NQ on the daily chart. First thing I like to do is mark out all the fair value gaps that I see are very clear to me, that where the price is currently respecting or rejecting it or recently bounced off of. So currently you can see there is a gap here that the price is respecting it. This level from daily. So here you can see this is a daily, and then there is full gaps here. So there's another gap here. That's also daily, but you can see essentially these are the current range, but you can't really map up too much within the daily. So I didn't focus too much on daily, and I don't see a point going to the weekly for intraday trading. So I zoom down to 4 hours, and I see a couple more things that's clear I can mark out. So with this, you can see this essentially is the 4 hours gap, which kind of lines up with the daily, which is good. So one thing to go over and highlight here. When you're going over from top to down, and there's multiple confluence that stacks with different time frame that align. For example, this align to 4 hours with a daily. Typically, these are a strong zone that you want to focus on. And next thing I want to focus on is this. So this is the 4 hours also. You can see this huge value gap. We came down here into the constant encroachment, and then respected, again respected, took this liquidity side, these two liquidity. Once it's taken, you can see it never broke below or any candle closed outside this higher time frame of 4 hour fair value gap. So I'll mark this out. And as you can see, this is also another 4 hour value gap that I'm expecting currently over here. And there are all these liquidity generating. So what this is telling me, essentially, I have more of a favor on the bullish side of this continue going upward to grab all these generated lower liquidity resistance. So down here we can see once this is grabbed, it bounce up and then also close outside this 4 hour fair value gap. So this showed me a strong trend of a bullish trend for going into today. So this is essentially Tuesday. Tuesday went gap up, rejected, came down, and joined the pre-market on Wednesday. So sorry, going to Thursday. This is essentially the price is respecting it, and there's a gap. I was expecting the price to come down here and see how expected either will fill this gap and then continue higher. This is what I'm expecting to see on today's essentially in the pre-market session that I want to see. But jumping on to 1 hour now, this is the 1 hour currently looking at. same thing. So I'll change this to 1 hour, just so it stands out. You can see again this same gap overlap with daily, 4 hours, and 1 hour. So this gap is very strong that I want to pay attention to. And here you can see this gap is also strong. And you can see it's clear that liquidity was generated, and then there is a lot of liquidity just sitting here that got grabbed. So all these got grabbed during this run up, and then formulate another liquidity of buy side liquidity here, equal high here, and another liquidity here. So this tells me a lot of things. One, in the higher time frame, price is moving up, breaking out with very strong volume and momentum, coming back down, filling this gap and respecting this gap. This gives me a lot of confidence that I want to look for a long entry. So in the market, going down to 5 minutes, this is where I start looking for my entry. So here I see on the lower time frame, this liquidity has been taken during the pre-market around London session. Now the next thing I want to see is some sort of market structure shift, and then I look for some sort of PD array entry. Whatever PD entry you use, fair value gap, inverse fair value gap, or any order blocks, breaker blocks, that's up to you. Today mainly focus is just leveraging how I leverage fair value gap and inverse fair value gap to tell me a story on how I form a bias going into a intraday. So currently, this is what I'm looking at. There is a high here. So in order for me to take a trade, I need some sort of candle that break and close above this previous generated high in order to form a market structure shift. I do not take something to highlight here. So if you go down to lower time frame, some of you might take this as a market structure shift here. Personally, I don't like to do that. Reason being is a lot of times you will be fake out a lot when you take this, because if you look at higher time frame, this is essentially one single leg, right? This is one single leg over here, not two legs. So I will ideally, for suggestion personally wise from experience, I will zoom out a little bit. You don't need to zoom out to 15 minutes, but I think 5 minutes should be enough for your intraday entry. But anything lower, I think you will get a lot of fake out. Okay, so now let's take a look to see if we get a breakout. Okay, so we do get a breakout over here. Next thing I want to look for is, do we get an entry of some sort? So here, this is the 5 minutes. There is a 5 minutes fair value gap. I'll just use this. So this is the fair value gap I'm looking at. So this is 5 minutes. Currently, you can see this already break up. So this technically becomes an inversion. So I want to see some sort of price tapping back into here. And also there is another confluence in here. So you can see there's another confluence that's forming here. Oh, this will be the 1 minute. Okay. I want to see some sort of entry. Okay, so we're tapped in here. That is fair value gap. And my stop will be this low. So this essentially, I do not expect the price to close below this market structure break, and also this inversion. If it breaks below, I expect the price to go retrace deeper. It probably getting swipe out more sell side liquidity before going higher. And then my target is at these equal highs, relative equal highs of buy side liquidity, and then that will be my initial first target, and then my overall target is at this. Let me zoom out here. So my overall target essentially is this gap here. So you can see there's a lot of confluence where it get rejected here. I expect the price to trace up into this daily fair value gap, and also this 1 hour and 4 hours fair value gap for a entry, for a profit target. So I'll put my profit target of here, and this will give you a 10 RR trade, but I'll just put it down for this, my first initial entry, initial profit target, and these are essentially my runner. So this already give you a 6 RR trade, so I'll let this run. And right away, when market opens, it already pushed quite fast all the way up here towards my final TP. So this is my final TP. And this is very straightforward. Okay, so this is as simple as it gets. Just using the higher time frame, you can essentially form a daily bias on where exactly the price is going, and then you zoom down to lower time frame and then form your structure. Here, I can also highlight something. Let's say you didn't wake up and get in join the pre-market, right? Essentially, this is getting join the London session. Let's say you didn't get in, you can also get in at a later time. So here is another conversion essentially that you can have entered. Here, the entry inversion, and then your stop will be at this candle. So you leverage this order block over here and outside this inversion for your risk. And then this is your B initial will be 1.84, and then the target will be here. So 4.72 for your risk and reward. It's still good. It's not as great as this, but I know some people don't take trade in the London and going all the way to New York opens. But typically these are second trade where you can pyramid into your entry down here for your initial size, and then pyramid in or scaling in. These are the entry that you could have taken. Okay, now let's jump into another example here. So here I'm looking at NQ in the 4 hours. Same thing, we'll go from top down. First we look for higher time frame fair value gap or any inverse dollar fair value gap, and then we zoom down to a lower time frame. So here is the obvious that I'm looking at. Within the 4 hour, there is a clear inversion. So after these candle has closed above this fair value gap, this is essentially become a inverse fair value gap, valid inversions. And then one thing I'm also seeing is here there are 4 hours. So this 4 hour fair value, so this 4 hour fair value gap is respecting this pull down, and then it's respecting. So I want to see if we can get some pullback into here, see if it's going to respect it, and then continue higher. Now jumping to one more time frame lower, so I go from 4 hour to 1 hour. So within 1 hour, I saw something interesting here. Here there is a 1 hour fair value gap, and also there is a stack confluence of inversion. So typically these are very good confluence. I like to see whenever you have these fair value gap and also another inversions. Sorry, I drew this backwards. So this is the 1 hour fair value gap. This is the inversion. Here, essentially, this is what I want to look for, and this is within this higher time frame 4 hour inversion. So this is great. So what I'm expecting, this is going to be too big even for me to put a stop. So ideally, what I want to do is clean this up. So I'll remove this bigger inversion, and mainly I'll focus on this. If I expect the price to respect in this area zone, I don't expect to trace all the way down here. I expect the price to have some sort of reaction at this area. I don't expect it to trace down to the 4 hours. But now I want to go down to a lower time frame. So this is joined before, I think around 9, joined before the market opens. We can see these relative equal lows got formed. I want to see all these low got taken and then reach down here in the 1 hour, respected, and then we look for some sort of market structure shift or change in state of delivery, and then have displacement. Once there's displacement, we look for retracement into any PD arrays for fair value gap or inverse fair value gap. Okay, so now let this play out. So here right away we can see these are taken, which is what I'm looking for. Now the next thing is it is sitting within the high 1 hour fair value gap and inversion. I highlighted. What I want to see is if it's going to respect here, which I do want to expect to if I want to move higher to grab all these lower resistant liquidity up here. Okay. And then I'll wait for any market structure shift if this is respected within this 1 hour fair value gap here. Expecting it. Now we essentially got a market structure break. So there's a market structure shift here. Now we want to look for some sort of entry. Here we can see there is a inversion that already got formed. Here is the inversions. Now we want to look for a entry. So technically you could have entered here, but if you miss this entry, you can enter down here as well. But let's say my entry was at this, and then my target of my stop will be at this low over here. I don't expect the price to move all the way down to these up close consecutive candle, since that you can use this as a order block as well. And you target for 2RR, so are these first relative equal lows, equal highs here, and then you can target the rest of the trade up here. So let's say you target this for your final TP, and then your entry is at this inversion high. We let this play out. Okay, so this trade took a little bit while if you have runners, but you should have ideally got your first filled around this high. So this is roughly the 2RR points. So 2RR will be around here. You should have got a fill at here as your initial entry, and then move the rest stop to break even, and then you have the rest runner all the way here for the 3RR trade. So you can see the price for this is very clean for the initial. The rest you probably need some patience to sit through it, but essentially it'll be a risk-free trade. But this is as simple as get. Keep things simple. Mark out higher time frame, and then look for the liquidity in higher time frame. Zoom down to lower time frame. Look for some sort of liquidity sweep, and then we look for market structures break, and then displacement. So here's the displacement. Once it's pulled back, that's your entry. And then target for at least 2RR and whatever equal highs or relative highs that you can see that's clearly on your chart. That's it. Keep it simple. If you find these videos helpful, please leave a like and subscribe. I will be posting these educational contents on a weekly basis. Happy trading. Stay safe.